Hey guys, this is Jack from Geek Assets and the private newsletter, the Raleigh Crypto Society. And this morning, if you woke up and you opened up your smartphone or you went to CoinMarketCap, you probably thought that you were having flashbacks to the Red Wedding from Game of Thrones, because that's what it looked like, blood in the streets, so to speak. So we're going to talk a little bit about. I figured instead of just doing a newsletter for people, I would do a quick video to kind of explain what's going on in the markets and how to think about what you're looking at. So remember, many of our subscribers to the private newsletter are newbies. They're young investors or traders. And this is the first time that they've actually seen something like this. So throughout the last couple of months, we've been trying to teach lots of new people market strategies, how to trade in the markets, specifically at the moment in the crypto markets. And every step of the way, there's been lessons to learn. Some people have taken those lessons and understood them, and some people have not. Well, today is another one of those lessons. And I've been trading in the market since 1990. I've traded everything from options, futures, stock market, Forex, of course, and of course, cryptocurrencies, as well as physical gold and silver. So I've seen it all. So there's nothing I haven't seen. Today is nothing new. So take a deep breath, have a cup of coffee, go out and get your hot tea, chill out, and as Aaron Rodgers would say, relax, just relax. So let's take a look at what's going on here. First of all, in the markets, which, whoops, that's not what we want to go, in the markets here. So as you can tell, let's refresh and make sure we're looking at it. We've had now 48 hours of basically red. You can see Bitcoin is driving the market down. We're at 48,000 from a high of around, what was it, 57 or so. So this is a fairly big retracement here. Ethereum is come back off the lows from this morning. Actually, it was much lower than 1534. So Bitcoin has been driving this market down. Janet Yellen from the government has been trying to hit Bitcoin with bad news left and right. Most of it's utterly ridiculous because the dollar is crashing and burning, and basically people have been moving their money into crypto. So what do you think the government's going to say? Unfortunately, many people listen to the news stories in the media and panic. Okay, panic. And that's kind of what's happened here. Elon Musk also came out with a comment that was totally over exaggerated. It was a tiny little comment on Twitter responding to somebody. And of course, it was taken completely out of context. So there are several things that are moving the market. So you can see across the board here, you can see red. Cardano is actually back to 96. This is pretty amazing. We've been talking about Cardano for months and telling people to accumulate. And the amazing thing is Cardano is still actually up. It's one of the only ones you're going to see that's actually up for the 7-day period. And we're almost back to the dollar. Same thing with Polkadot. So the moral of the story here is if you buy quality, you're still going to get these massive shavings when these things happen, when these corrections happen. But if you're in quality, you will always be in quality no matter what direction the market is going in. And usually things rebound quicker. Now, that's not to say that we haven't been shaved off of some of these. Just scrolling down here a little bit, we'll take a quick look at some of our portfolio holdings. Here we go. This is a big one. Now, I've been warning people for the last week and a half. The graph is a great project. We love the graph. It's ranked number 36 on CoinMarketCap. This went as high as, I think, 265, 269. And it is now down to the 169 level. This morning I saw it as low as 150. It may have even been lower than that. I've been begging people to take profits along the way. Some of you listened. Congratulations. Some of you did not, and now you're nervous. So we're at 169 on the graph, and Algorand is just below $1 at 96. This is another one that I think could have gone even lower, but it did not. You're going to see Algorand back above $1 fairly quick. So this shaving was not as big. This was as high as 150, 155, maybe a little higher than that, and it's down to $1. It was a little bit lower than this morning. I think I saw it at about 88 cents. This is one to keep your eyes on without a doubt. Some of the other ones, let's go through this real quick because I want to go through some of the market strategies. Some of our family members are in REN. This is back to $1.07. This went much lower, below $1. Let's take a look at this actually. How low did REN go? I don't have this in my portfolio. REN apparently was at 90 cents, so it did not go as low as I thought. And that's a quality coin also, even though we don't have it in our portfolio right now. Some of our friends and family do, and there's nothing wrong with that. I'm looking down the list here. Now, two of the newer ones that we had on our list that I absolutely love, if you did not get in them in the last couple of days, you definitely are getting in at a bargain today. So let's take a look. Polygon, symbol Matic. This is at 12.5 basically cents. We've been buying it between 14 to 18 cents. So you'd be getting it at a discount. We are going to definitely add more to our position here. This is a phenomenal midterm to long-term coin. So it's on sale again today. And the other coin was Stake, okay, which is XDAI. Okay, XDAI. Let me take a look and see what this dropped to. This dropped all the way back down to 25.66 with a high of 35.87. So if you were starting to accumulate XDAI like we were buying XDAI between 25 and then we bought some more coins at $30. So we're right there now. This is a incredible buy. Okay, and again, this went as high over the weekend. This had this crazy move, and I believe it was to 42. Yeah, 42.51 over the weekend, and you're now able to buy this at 29. So the coins that we're in, that we've been recommending to people, have been shaved just like everything else, but some of the coins that really don't have as much backing and the projects are not, are a little flimsy, those coins have moved down substantially more. So that's the deal. So before we talk about recommendations right now, I want to explain to people, this is a teaching moment. So let's talk about some things that you guys have to understand. You see that most things are way down, okay? Way down. Some of them have touched 15% down from their highs, and some of them have gone as much as 30% down from their highs. So what is the difference here between what we want to understand is two terms, retracement versus reversal, okay? Retracement versus reversal, okay? Now let's take a look at this. So a lot of people are asking whether this is a market hiccup, which is a retracement, which is a natural thing that happens in the markets, or is this a complete reversal, a correction? Are we going into a bear market? Now, I don't have a crystal ball, but we can discuss the differences here and then we'll go from there. So retracements are temporary price reversals that take place within a larger trend. So when you're looking at a chart, take a look at this chart if you guys can see it. And you can see that if you draw a line from the bottom here to the top, this is definitely a bull market, right? This is definitely a bullish market. We've gone way up from the bottom to the top. But in between, we've had times where the market has dipped and we've seen the retracement here. We've seen a retracement from here to here, okay? Higher lows, okay? So it's only a retracement because the lows are getting higher. Does that make sense? Every time it retraces, the lows are still higher than the prior low, okay? Another low higher than the prior low. So this is natural in the markets. Now with the cryptocurrency, with the crypto markets in the last 60 days, we've seen charts that basically show straight up. It's insane. They're almost fake looking. So there is no support built in because we're going straight up. It's not taking a breather and building support, meaning that there hasn't been enough time for lots of buyers to buy here before we go up, and lots of buyers to buy here before we go up. Our market is more of a straight line in the last 60 days. So when we have retracements, they're much deeper because there's no support level there. Okay, there's no support level. And that's the reason why our retracements are so deep. Okay, 15, 20, 30, 40% retracements. Okay, so retracements in an uptrend are characterized by higher lows and higher highs. So all those people that don't pay attention to the charts on CoinMarketCap and don't click through there, now is the time to finally take a deep breath and take a look at charts and be able to look at the 3-month charts, the 6-month charts, to understand a little bit better and learn how to read charts, which is something we're going to be teaching you. We haven't been able to do that so far because everything has been going straight up, but we're going to be doing that in the near future. Now, let's talk about an actual reversal. A reversal, on the other hand, is when the trend changes direction completely. So these are not retracements in a bullish market. This is a complete reversal where the price is likely to continue in that reverse direction for an extended period of time. Are we currently in a retracement right now, or are we in a reversal? We'll talk about that. Okay, so now you understand the difference. Here is a reversal chart. Okay, we're slowly going up here. You can see with the lines, there's a pattern. We're going up. It's slow. It's not like our cryptocurrency going straight up, but we're touching the bottom, we're going up. We're touching the bottom, and then all of a sudden we break the support level here. We break the support level, and this is absolutely a full reversal. Is this where we are in the overall crypto market, or are we in a retracement? Okay, so does everybody understand now retracements versus reversals? So how deep, the next question that people should be asking themselves is, how deep is this retracement? Let's assume for the moment it's a retracement. How deep is this retracement going to go? Well, what we use in charting is called Fibonacci retracements. Now, I'm not going to go in depth with this because the math is way beyond what we're talking about. Anybody who's interested in understanding Fibonacci retracements, and you should understand this, just go to YouTube and Google. Go to YouTube and put in what is a Fibonacci retracement, or what are Fibonacci. There's tons of videos that do a great job of that. That'll do a better job than I will here. But without going into the math, Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to recur. These are organic numbers. These are numbers in nature that always follow through, and these are levels that are associated with a percentage. And basically the percentage shows us how deep of a potential retracement we can go to. These numbers do not change, and they're basically like magic. And until you see this, you would never believe it, but they work, okay? So retracement levels with Fibonacci are always the same: 23.6, 38.2, 68, 61.8, and 78.6, which is a very deep Fibonacci level. So let's take a look and see. So you can see these Fibonacci levels. Okay, you can see, hold on, there's got to be a better chart they give you here. Let's see. Well, it doesn't look like they're doing that the way that I would here. So basically what we're looking at is we're looking with Fibonacci levels to determine how deep the retracement is going to be. Okay, so the way that this works is if we're looking at a chart, we're going to connect from the top of the chart and then pull the Fibonacci tool down, and we can see where we potentially will bounce back from. Okay, where we will bounce back from. So if you look at this top, we would be pulling the Fibonacci tool down. It did bounce from this level here, this horizontal line, but then we did come back down and test this next Fibonacci level, which in this case is the 61.8, I believe. So how deep are we going to retrace? Okay. If you look at most of the cryptocurrencies and your own coins right now, you will see that most of them did retrace already back down into the 23.6 level, the majority of them. Some of them may have even gone as high as 38.2. Okay, so I think looking at what's going on, and again, the smoke hasn't cleared. I think that we will be touching the 38.2. This is my guess right here, is that there's a good chance that many of the coins are not going to do the bounce until they reach 38.2. Or essentially the overall market will probably get to this 38.2 retracement level. So if you pull up a Bitcoin chart, and let's just do this and take a look at this. Let's look at Bitcoin, which is dragging the market down. Okay, let's look. Okay, so this is the all-time. That doesn't do us any good. Let's go back to the week. Okay, so this is where we're at right now. Okay, and it went down to 46,000 right here. Okay, February 23rd. That is the lowest it's been. Let's go to the daily just to make sure that we're looking at that right. 45,837 is the dip here, and the high we can see just happened on February. No, that's not right. Okay, so the high for us is right about, I think this was the high, right about here, 58.1, okay, around 58.1, all right? So if we had the Fibonacci tool, which we can't do that here on CoinMarketCap, we can do it on TradingView, but I did not pull it up. So you actually went from 58,172, and if you pulled the Fibonacci tool down, you can do the math and you can see that you retraced all the way back down here to 46,000. Is this the end? Is this the real bounce, or are we going lower? We potentially could go to 42,000 based on what we've analyzed. This could go as deep as 42 to 43,000. I don't think it's going to go lower than that. There's way too much buyers, and we've already seen it snap from this bottom level at 46 back up to 48. So this could retrace as deeply, in my opinion, to 42,000, which could bring the market down quite a bit lower. So I'm not saying it's going to happen. I'm saying it's very possible looking at Fibonacci. All right. So does everybody understand now? What we're trying to figure out here is whether this is a retracement or a full reversal. Okay, my spidey sense tells me that this is a deep retracement and not a reversal, but we'll know more within the next 3-4 days. We are seeing some of the coins stabilize, but we saw that yesterday afternoon as well, and then we went deeper. So we really need more time here, letting the smoke clear to determine whether this is a retracement or a reversal. So let's talk a little bit more here about, for newbies in the market, how to look at this. Okay, like I said, we need to relax. Okay, if you've been following the Raleigh Crypto Society newsletter, you can rest assured that all of the coins that we've been recommending are major legitimate projects with serious teams behind them, with projects that are attached to other major coins and things that are going on in the blockchain in the blockchain sphere, and they will have serious impact. We have never recommended, and our portfolio does not have a Doji coin or anything like that in it, that basically is just fluff. Okay, that doesn't mean that we don't get taken down with the rest of the market. It just means that we're always in coins that have something backing them, that are real. All right, so there's a couple of different people that follow us, and what we're about to talk about really is different for each one of you. Some of you are still fully invested into this market. You didn't pull out any profits, or even if you did, most of your funds are still in the market. For those people, relax. Don't even look at CoinMarketCap or your portfolio for a couple of days. Don't stress. Don't stress. I can tell you that we went through a full bear market where we were still mining Ethereum for over 18 months, and I barely even looked at the price of Ethereum more than maybe once or twice a week because there was nothing to look at that point. Now, I'm not telling you we're going into a bear market. All I'm saying is watching it every 5 minutes, looking at these moves right now is meaningless. If this is a minor retracement and we start to move again, feel free to go back and be able to take a look, or take a little break and relax. Let the markets ebb and flow. We can't control where the markets go and where this retracement stops. Relax, focus on other business opportunities, which, by the way, we're going to be introducing quite a few passive income streams in the next few weeks to go along with our first one, DHF, that we introduced in an earlier video. So just relax. Nothing is over. This is a natural point in the market. You can't go straight up without having these type of retracements, okay? This is natural. Now, for those people that did play it smart, that have been pulling profits out, that have some money in US dollar coin or Tether or completely on the sidelines, whatever it may be, is this an opportunity for you to buy on these retracements, to buy on the so-called bottom? Well, here's the pluses and minuses, okay? We did buy yesterday on the big dip yesterday. We did move back into some Algorand, and we did stake a little bit of a claim back in the graph, okay, just so you guys know. And we bought more of one of our favorite coins, Polygon, that we just showed you. Did it go lower than what we bought? Of course, because we cannot predict the complete bottom or the complete top. That's why what we've been trying to teach you is you need to live in between there somewhere. Stop trying to call tops and stop trying to call bottoms and only worry about what your funds are doing. Take those profits, shave off some of those profits and hold them back so that they're there to re-enter the same coin or other coins. That's what we've been trying to teach you. Okay, so if you do have money on the side, can you move in slowly to buy some of these coins at lower levels? Yes. Just understand that we don't know where the bottom is. So if you have $5,000 sitting on the side ready to unleash, would I put all $5,000 into whatever coin or coins that you want to buy on these dips? I would hold back. I would strategically move in a portion because we don't know what the bottom is. You may get another buy. Break that $5,000 into 3 or 4 increments potentially or more and slowly buy back in, knowing that you may hit the bullseye by eventually buying in at the bottom. And while you're doing that, you're dollar cost averaging in. Now, only do this if you have a midterm to a long-term basis on the market. If you are not okay with these funds being trapped, so to speak, in the market, if this is a bigger reversal, then do not do that. If you're okay understanding that this retracement can happen 5 hours from this video being released, or 5 days or 5 months, or possibly a year, okay, then you never move your funds in. But if you're okay, because you know you're buying quality, and you're going to be okay with that, yes, you can step your foot back into the pool on the quality coins that we've been recommending. My feeling is this is going to be a small retracement. Not a small retracement. It's already been a decent retracement. It's already been 20 to 30 to 40% on some of these coins, some of them bigger, like the graph. Our portfolio, just so you know, personal portfolio with cash in the market, with the cash sitting in the exchanges, has dipped 25% from the top, okay, because we have a diversified portfolio. Some of you are not that diversified because you don't have that much funds in the market, so yours may have dipped 40% because you're in that one coin. But because of our diversification and having cash, we dipped about 25% from our peak, okay, and we still have cash on the side. So don't panic. That's the point of this video. Relax. Just relax. You're in quality. You're going to continue to be in quality. Don't panic. If you have funds on the side, by the way, this is the time for the people that do have money on the side. This is when people make 200, 300% on their funds quickly. Because if this retracement only lasts a few days, and you're buying, let's say, Let's look at some of the smaller coins. I mean, we can look at Ethereum here back at 1500. It was below there earlier. Is this going back to 2000? Sure. But let's look at something that's more reasonable price-wise. Let's look at we can look at the graph. Okay, wow. Okay, so the graph is already back to 166. Okay. Do you believe that the graph can go back to 250, 260, which was the top end, 265? The answer is yes. This is a solid coin. So if you're going into the graph, if you got in this morning in the 150 level, okay, look at what happens when this pops back to 225, just 225, not back to the height of the 269 or whatever it was. Just a 225, what kind of a percentage return that would be? Incredible. Okay. And that's how people turn $5,000 portfolios into $50,000 portfolios. And when you're playing with $50,000 portfolios, getting to that $250,000 in this type of market is not that difficult. Okay. This is how you do it, but you have to be okay with that. You have to know that this retracement can continue and the graph can go down to 135 possibly, okay? Or it can shoot back to $2 by the end of this video, all right? So understand, here's Algorand below $1 at 97. For me, anything Algorand in the 80s and 90s is absolutely a buy, okay? But you have to make that decision. And again, going back to Polygon, okay, going back to Polygon, one of our favorites right now, okay, we were buyers of Polygon. Let's take a look at this chart for the week. Look at this, okay, we were buyers somewhere near the top here, believe it or not. We were buyers right around this 17 level here, okay. We bought more yesterday at 14, right around 14, and now we're sitting at 13 cents. Okay, this one is low overnight, 10 cents. Unfortunately, we did not see this. I would have definitely been buying and accumulating more at this 10-cent level, but it doesn't matter. Do we believe this is a 20-cent, 50-cent dollar? Yes, we believe Matic potentially could be a $3 to $4 coin. Okay, we absolutely love this coin. So buying and accumulating between 10 and 20 cents is great. We're getting a discount right now. So this is one that's really on our radar right now. Okay, so we're going to end the video here. Take a deep breath. Just relax. Relax. For newbies that have never experienced this type of retracement, turn off the computer. You don't have to watch it. Okay, it's going to move whether you watch it or not. Check it tonight. Check it tomorrow night. And see where things are. For those people that do have money on the sidelines, look at the charts, evaluate your positions, and be strategic as to the way you deploy your funds. Okay, it's a chess game, people. It's a chess game. Deploy your funds strategically, and you will be rewarded in the short term as well as the long term. So let's make some money. Let's go have a cup of coffee or tea, relax, and we'll be back soon with to basically give updates in the next 48 hours. We'll probably do another video and take a look. But I'll give you this. Here's a great, especially for new people, here's a great exercise. Take a look today and write down some of the coin prices that you're seeing at the lows during this retracement. Polygon, I didn't see it at 10 cents, so just put 12 cents for that. Okay, take a look at Ethereum. Ethereum dropped below 1,500. I think it was 1,450 or so. Take a look at the chart. Write down Ethereum 1,450. Write down reserve rights. Okay, take a look and see where that dipped to. Take a look and see where you could have bought XDAI. Okay, today, and some of the other ones that were in Edgeware. Okay, the Graph, Algorand. All right, write down what you could have bought them at today. and keep that handy, and then take a look a month from now, 2 months from now, 3 months from now, and see what the retracement and snapback looks like. And that's a great way to kind of get your psychology back as to the way markets work. Have a great day. This is probably the longest video we've ever done. Talk to you later. Stay safe, and we'll see you on the other side.